inflation, I mean, well, like you said earlier, perhaps they're being prudent to wait and watch to see whether any of these downside in commodity prices, etc., will help us. Or are there more localized pressures which they're now fearing? Price, for instance, they mentioned.
I think there is an element of perhaps caution, being built in, because in the first couple of MPCs this particular year, the RBI had large forecast misses, right, which were largely on the back of supply side pressures. I think the governor did indicate today in the press conference that, the demand side price pressures are not as evident as the supply side price pressures are. But then clearly, if you look at a bunch of commodity prices globally, we are going to see the pass through. One area I think which perhaps is a bit unclear is to what extent they are passed on, because the government and the private sector may want to increase their margins or taxes, which were reduced through the last 6 months. At the same time, it could also take a little bit longer, for it to get passed on, and maybe we will not see retail prices come off. So I think the way we are interpreting this is that, the RBI will probably see some downside surprises. The extent of downside surprises, though, will get a bit clearer as we approach winter, because right now the big, uncertainty is in Europe and what's happening with the Russia gas situation. If that gets turned off, then the energy price outlook could be very, very different. So I think it makes sense to wait for another meeting, for the RBI to be taking a more significant decision as far as what is the direction of inflation. But at the moment, we do think that the next couple of prints are going to be lower than what is being implied in their numbers at the moment.
Kaushik, also, I mean, same question, but also, I mean, even if you look at sort of their forecast now into Q1 of FY24, you're coming nowhere close to 4. I mean, forget 4, I don't think they're expecting it to even come into the 4 handle. So even from that perspective, I guess, their stance, their rate action is justified.
Yeah, so if they did not do 50 while keeping 6.7, it would have been strange. The fact that they've done 6.7, they're actually more confident on growth. If you've heard, and all the numbers are looking much better than people would have thought. And you look at non-oil, non-gold imports, anything, you look at, even PMI, GST collection, whichever way you look at it, the numbers are looking strong. Yes, there will be a slowdown going forward, but maybe it will be more than, the slowdown won't be as much as what RBI is predicting at 4% for October, December, or January, March. And the real slowdown probably would come in FY24. That's what our view is. And that's why we have a growth estimate of 6% for next year compared to 6.5 Bloomberg consensus estimate. But on inflation, a couple of things. One is CPI doesn't give that much weight to fuel, right? That's why you're seeing WPI having gone up. So similarly, if prices come down, the impact on CPI will be lesser compared to WPI. So you have to keep that in mind. The second is you have all this risk of services sector inflation momentum being strong and continuing over the next 3 to 6 months. So core inflation could remain high. Electricity tariff revisions, this one-offs that can hit you. Even mobile phone carriers increasing their tariffs. So you don't know about all these factors. And I always felt that October, December at 6.2 was on the lower side, and even January, March at 5.8 is on the lower side. Our own forecast is close to 7 for October, December, because we are looking at July, September to be a little lower than what RBI has given, something like 6.9 compared to 7.1. Remember that RBI had given 7.4 for July, September. So they have brought it down to 7.1. We think it will be even lower because I'm getting a July CPI estimate of about 6.6%. But then the point is that going forward, it may not correct continuously, and October, December could be more sticky and staying closer to the 7% mark because of the food price related uncertainty. And then January, March, I'm looking at a number average of 6.5, whereas RBI has given 5.8. So my thought process was that at this point of time, given all this uncertainty that Rahul talked about, it's better not to touch anything. 30th September is when RBI comes and gives a detailed forecast in the monetary policy report, does all the adjustment of oil prices. That time, if you feel like you can bring it down to 6.5 or whatever it is, and even on growth, you'll get the April-June GDP number. If it is higher than 16%, then you can adjust it upward, downward based on how the world is looking at that point of time. This was a very prudent move not to touch anything at this point of time and give a consistent 50 basis points rate hike at this stage, and then we'll evaluate 30th September what we need to do.